All right, you're here. Okay, so let's, where am I? What page am I on? What screen am I on? All right, well, we got the stops in the Nasdaq. We got the stops in the S&Ps. And I think that Apple's done. And so's Google.
Haven't been watching this.
So Apple.
Hey, Ira.
Good morning, sir. How are? Afternoon, whatever. Where are we?
Yeah, good afternoon to us. Good afternoon to you now too. No, you're 2 hours, right?
No, it's noon. An hour. It's still noon.
These have been some pretty good days.
Crazy days, yeah. Crazy days.
I got a little out of step with the Amazon thing yesterday, but other than that, and you were looking at the euro not being short that. Now it's all euro against every single currency in the planet except the pounds.
Well, the euro's still weak against the Swiss, but the euro, I mean, the rally it put in all day today has been. I was long and I let it go way too early.
Yeah, I mean the euro yuan, the euro euro Aussie, euro Kiwi. And the gold yuan, and all those are just.
Oh yeah. Yeah, this has been an incredible month for the gold currencies. Well, incredible too much. But the bigger issue, of course, has been the correction in the commodity currencies, as we talked about the other day, and all the commodities. I mean, this is. I was talking with a couple of guys this morning with Mike Temple, who writes in all the time to the blog.
Yeah.
And we were talking about this. I said, if I ran the Fed right now, and you can all challenge me on it, but right now, I'd make an announcement. I'm cutting rates 50 basis points just until this clears. And if it's not as severe, because as a demand shock, because that's really what we're talking about, a demand shock to the system, which is what the commodity markets and the emerging markets are showing you. If it's not and it relieves itself, we're going to pull it right back. But we're concerned because, and the only reason I say that is because you've seen the dramatic move in the curves.
Somebody needs to mute out, please.
Yeah, that's Jeremy. Guys got to mute out when you come in. All right. Well, I've been having trouble with my CQG data all day long.
Yeah, I was all week. Not today. I straightened something out.
Yeah, now it's going gray again. Oh, it's painful. I mean, I already shut down once and cleared out all my temp files. Okay, well, I'm not going to show you that screen. CQG.
All of them, I wrote, while Judd's getting everything ready, the week has been, as in any volatile week or just, trades with nice momentum, they've been great opening range trades. And you just trading the opening range, using the opening range has not only given us great trade definition, in every, given us great entries, and also, we know exactly where we're wrong. but also has given us really, really good risk definition and targets on the way down and on the way up. You know, it was nice to, we were short yesterday on the way down, and then we got long and on the way up 2 or 3 times.
Yeah, and as you know, it's defining your risk that's critical to all of it. Defining your risk, that's it.
That's right.
Everything else is just commentary. You know what? If you can define it, you know, that's why it was the beauty of that S&P bond. And we talked about that in real time. Up against that level, if you wanted to go, if you were looking for, that was the ability to define it. No other reason. I'm not locking up when anybody says, oh, you know, that's definitive. That's the absolute Fibonacci. No, it's just a way to define that, hey, the markets did, but if you were thinking that the market is way overextended, that was just a way to define it. And that was the discussion in real time.
Yep.
That's what people need to take away. You know what? That's the learning of it. Because, yeah, we all feel like that. But again, as I would always tell my kids when they were young, you know, everybody's got opinions. They're like, you know, as we would say, they're like sphincters. Everybody's got one. But, you know, it doesn't matter. And if you're locking up an opinion because you're just trying to be right, you got to convince yourself, well, I'm really right. No. The market will tell you. You know, look at, again, if you start and post it on your computer, that markets can remain irrational longer than you and I can remain solvent, it'll keep you humble. That's the importance of that. And go, yeah, I can see this. I'm a fundamental analyst. I can see this, but as we've learned, you know, from many people, if you're right at the wrong time, you're wrong.
You're wrong.
Unless you have unbelievable amounts of cash that you can sustain yourself. But I've seen a lot of bright people in my almost 43 years of trading who were very bright, really could analyze it, and went bust time after time after time after time, or they lost so much money that they gave up on their business because everything was locking up. They had to lock up with the markets. No, I'm right and the market is wrong. And I did a piece in the Tribune in 1987 in the Tribune magazine, First Person, and I said, it was kind of interesting because that piece was published the week of the crash, even though I did the interview back in May of 87. But my comment was, the market's never wrong. The market's never wrong. If you're a trader, it's never wrong. If you're a long-term investor like Buffett, you could say, well, it's inefficiently priced and I see some opportunity here. But the market can remain like that. Look, how many people got destroyed shorting Tesla stock? We don't even know the damage, but it's in the billions. It's in the billions.
Yeah, Novogratz was talking about it last night. He took a big hit in his PA.
Yeah, because people lock up with it, and they, you know, especially short sellers live to be right because they are some of the best analysts in the world. But, you know, funny things happen on the way to the forum, to quote Zero Mistel, and it is true. And lock up, and look at what's his name, Ackman, locking up, and how much money he lost with
Herbalife.
Valiant. No, forget Herbalife. That was the short side. But even locking up with Valiant, you know, with the long side with Valiant, until he finally puked at, you know, between $10 and $15 from a stock that was at 240. You know, as Matt started this conversation, you find location. And if the opening ranges are the location trick, and it used to be great in the pit, and now they're working again because I know once the momentum fundamental guys and women, I'm sorry for speaking in the male gender, I'll speak in both. Once they get back into the driver's seat here, we'll see more and more of this. It's the algorithms, you know, headline driven, who react in such violent ways that have made it more difficult, but so be it. So be it. I can't tell you how many good trades I made by putting orders in and just waiting for the market to come.
Mm-hmm.
Yeah.
All week. There were some unbelievable. And you know what? And last night when I was doing my work and I looked up at that 3293 area in the S&Ps, between nine, you know, we go back to you know, certain days where that was a really big area. Just like, you know, I was looking today on the January 7th and 8th trade with the when they hit the U.S. embassy and in Iraq, and you know it, and some of those levels overnight were very interesting levels, very interesting.
Yeah, down to that 3180 area, 85.
Yeah,
That's
yeah,
beautiful.
and when I look at a 240-minute bar to see where it closed, I think it closed at 3227 on that bar. You know, so there's a lot of things in here. It's just so much to watch, and this virus, and I really, I'm fortunate because of my brother, you know, who's really kept me abreast. But now you got people who are really nervous going to the weekend, and I was seeing some of the numbers because, you know, now they're geometrically projecting how many are going to be out there based on the proliferation rate. So, you know, they come up with some absurd numbers. But still, I'll say it again, most of the people who've died, from everything I've read, were people who are already some frail in some capacity or sick with something else. So you have to be careful. And that's why some of these health organizations have looked at it, and they're not getting bent out of shape, because that's some of the data that they've been looking at is who's dying. Who's dying? So I think we'll see more of that this weekend, more analysis, because it takes time. You know, markets want to react in nanoseconds, but science doesn't react. You know, they have to do very thorough research. Can you hear that barking?
Yeah.
Uh-huh.
Okay. If you hear a scream, that's because I butchered him. Sorry.
So yeah, Ira, when you were talking before, I had I put the SPU bonds up so everybody can see that quarterly chart, and how once it broke down under the yearly close, it never came back above it.
Yeah.
Today,
I was just thinking.
you know, you had the low in the Nasdaq bonds was the 50-day after it ran the stops at 9,003. So all you're getting is some, you know, I think all you're seeing is algos trying to, you know, cover some of their shorts because they've been selling all day. I mean, most of my board was in a fast market for the first hour of the day. All the ETFs were all lit up.
Well, you know what? But we have, and I was thinking about this when I was working out about 2 hours ago. You know, there are so many people short vol. It's one of the biggest plays out there.
Why?
And well, because it's been a moneymaker.
No,
you know, these people are all chasing.
I know.
They
I know.
And they're looking. So, no. So you think about it. How are they covering themselves? Are they selling S&Ps? Are they selling Nasdaq? What are they doing? Yeah, that's. So I know. So I preempted you because that's the issue. How do you cover yourself? But they're active players. You know, they may hold the biggest positions of anybody, because when you're short vol, you're basically making, you know, especially in this world, you're making them play on the continual complacency of the markets. Well, somebody is setting this in motion. Somebody, and I, you know, I started the conversation, Matt. I don't think you were listening, but again, if I was Jerome Powell, I'd be cutting rates 50 basis points today, and I would explain it to people. We're taking this out because of the way we see the curves have melted down here. Because you have to think about the first 2 weeks of this. You know, the market had beat back a lot of negative news. You know, so if you're a vol seller, you're committed because there was an assassination of a top Iranian. There was the bombing of the embassy. There has been elections. But now, and the market just kind of settled in. Just settled in. It wasn't really doing much now. And all we did was see spoofs make highs, Nasdaq, highs. So if you're sitting in that situation, you go, well, I've absorbed a lot of punches and the market's still going. Well, as we talked on, I think it was Wednesday. Yeah, we talked Wednesday. And the market was behaving pretty well. And yesterday's rally, I think, really was a killer for a lot of people because they go, oh, well, now we've weathered another storm. So, and that breeds that complacency. I don't know if you guys saw Dudley's piece at Bloomberg on Wednesday. I thought it was so flawed. And several people called me and go, "What do you think of that?" I said, "Terrible." It shows you their mindset. But now you have so many people committed to this that if the short vol positions really are a problem, are we going to have Mnuchin calling the big banks again like he did in December of 2018 on December 23rd, 4th, and 26th? Because they've got to worry about some people here. How big are the short vol positions? Are they causing great stress in the funding markets? There's some serious issues here. So,
well, the curves. I just was kind of going through the 2.5s, the 2.10s. I mean, they're all have ORL days at the bottom of a move.
Well, and they were acting great. I did really well the first part of the month with the steepeners, putting them on because we're again, the Bloomberg index, the CRB index, emerging market currencies were rallying, the dollar was softening, and everything reversed in the last 8-9 trading days in a dynamic way, which is again why I will always be a trader. Now I've been out and I've escaped, but I am now going to look for newer levels in which to play here. So that's what I use this for. I'm going to be very cautious. Now this is interesting because of course it's January 31st, month end. Well, there ain't a lot of people with a whole lot of profits, on the books right now. So let's see what happens towards the end of the day because it could really get volatile. And we'll watch it. But if I was Powell, because Powell's, we haven't talked since then. But the press conference, first of all, he should have canceled it because he didn't say anything. He had nothing to say. And he showed us that, but he did say a couple of things, of course, about the virus and that they were worried about it. Well, and he talked about inflation, the lack of inflation. Well, if you're watching the markets right now, and again, why? Because there's a demand shock potential here. That's what's going on. This is everything's reacting to right now is they're worried about a demand shock. The demand is going to drop because the Chinese are now quarantining. The United States is doing a little quarantining. Russia sealed the borders. So economic activity is going to slow down. And we see it. We see it in the price of oil. We see it in the price of copper. These are huge moves. So if you wanted to get out in front of it and say, well, I'm going to buy, this is Jerome Powell, who in 2019, and I'm using his words, the 3 cuts were an insurance rate policy, right? Do you remember him saying that? We took out an insurance policy. Well, you don't want to do a quarter cut. If you need an insurance policy, not that it's going to really matter as far as, whether people are going to borrow money, not borrow money. But if you're looking to again, tell the markets, hey, we're here. We got your back. Whatever's going on, we're going to lower the cost of borrowing for anybody who has to do some short-term funding here in a stress situation. We got it. And we've seen them do it before. They can't pretend that it hasn't been done. Again, I go back to the situation with Jerome Kerviel at SocGen when the Fed cut 75 basis points over on that Martin Luther King Monday. I think it was back in 2005 when SocGen was purportedly in severe trouble and they were trying to give some sustenance to the market. He's got to be very aware that this could turn into a deflationary spiral pretty quickly, especially if these emerging market currencies keep. Now, with that being said, of course, we know the peso's held up very well here. I sent you that piece yesterday that others wrote, Judd. I said it was worth reading. But the Brazilian real, I believe, is making all-time highs. I believe so. Let me just put up a longer term. Yep, all-time highs.
Yeah. That thing's just
the ruble, because of the oil and just slow down, with the closing of the border, has dropped dramatically. We can go on and on. The Chinese currency is back above 7 after it looked like it really wanted to get going in rally mode. Let's see. The South African currency is, I'm looking at it right now.
Yeah, and Euro is getting close to its 200 day.
Which one? I'm sorry?
Euro yuan.
Yeah, Euro yuan. And the South African currency's dropped almost 5% this week. Let's see what the Turkish is doing. Nothing that much. Let's go through it. But there are things going on here. If the Fed stayed true, but again, they own this whole damn thing. Whether they want to, some people will say that the market owns the Fed. I think that was true, but because the Fed has reacted and pivoted going back to January of 2019 in such a dramatic fashion, I think the Fed now owns the market because, as we saw, last year's 30% rally in the S&P, 22% of it was taking back the break in the last quarter of 2018, and then they added 8% on. That was, mostly, I would say 90% due to Fed action. So they own the market. What's it going to take? And that's the question. What's it going to take? Now, because I trade as well as analyze, to me, I did a low risk trade. It may cost me a couple $1,000, but I bought some Fed funds contracts, thinking, well, if the S&P's really started to break late today, maybe over the weekend, we've seen funny things when they get really nervous.
And it's the news. Ira.
I'm sorry?
Did you go with the March 20s or the March 21s?
No. I actually bought the Feb 20s because today's January 31st. So if they did something today, I'd get the full thrust. You'd get it in March anyway. But
That's all right. So can I ask you a question about that? So,
sure.
If we have the S&P right now is just under the 2019 settlement of 3231. That's also a big number for Judd's matrix stuff. So we close under there, and I had covered my shorts down near. We're at the yearly opening range. So this has been my objective to cover my shorts. I covered them, and now I've re-entered at 31. And we don't know what it's going to take for the Fed to cut. But if we have some late day weakness, just some late day weakness with some, maybe some virus stuff or just some other things going on this weekend that's, showing going into next week, we're going to have more. You think that they may cut that quickly, huh?
Well, this is what I think, things that I think about. Listen, it's a long shot.
Of course it is.
But because the central banks have gotten so involved in trying to control the markets, here's an event. See, those 3 cuts, had they not done them, they could be using them now because there is an issue and because these emerging markets, we were getting some movement because they need a weaker dollar. They're so loaded up with debt, dollar-based debt that they have to repay. So if the dollar is rallying, and it is rallying against the emerging markets, look at what's it up against? The euro's up today, right?
Yeah, euro's up 54 and the Swiss is up 65.
Yeah, and the yen is up.
And the yen's up.
And the sterling's and the sterling's up because people finally woke up that everything that was being talked about with Brexit is not quite what they were selling. And now that it's over, it's interesting how the narrative begins to change. Well, it's not, but we've talked about that.
Yeah,
we've talked about
I discounted this yesterday. I didn't talk about it last night because there was so much stuff going on in the equities that it was
right.
I didn't really want to focus on that.
The sterling had a great week, and again, they didn't cut rates because it would have been absolutely, as we talked in real terms in this room on Wednesday, it would have been a mistake. And even Carney had to admit it. And his analysis has been so flawed. When I hear people talk about him in these highfalutin phrases, like, get out of here. You know what? Go look at his record, please. Before you start telling me, when a guy's been wrong 98% of the time on everything he said, he was too political, which is why he got the job that he did. Now that he's now that he's out at the Bank of England. So, okay. So the pound had a really nice week.
Yeah, and it started yesterday just after the meeting. I mean, they just started to rally him and took off.
Okay. So let's look at the currencies that are up, okay? We just cited them, right? There's four majors, but the Aussie is down. The Aussie's had a miserable week, as it should have. The Kiwi's down. The peso's held up really well this week. But that's why that author's piece was so interesting, because he laid out the Canada has had a miserable week.
Yeah, through the 200.
Four currencies. Take the sterling off because people were so short and a lot of that I think has been short covering. But the Swiss, the euro, and the yen are all funding currencies for carry trades. So as the U.S. yields are now moved so dramatically this week, people are taking off some of those, where they were borrowing in euros. And now that the U.S. rates are coming down, there's not as much fat there, so they're taking off some of those trades. So that's why I got long euros yesterday, because and I didn't stay as long because I got a little nervous with when there was some of the more virus news out, and because Germany's so dependent on exports to China. But I'll tell you what, the euro's performing really well. And you think about how bad the economic news was coming out of Europe this morning. Terrible news. The numbers are even the Swiss numbers, but these are all where people have been been short in an effort to use it to fund other investment vehicles. So between all the equity markets and everything else, there's unwinding of these short positions, which you have to take into in stride. So this is what happened. What happened to the role of the dollar in a safe haven environment? Well, it's good against some currencies, but it's not, because it's not good against everything. Not good against everything.
The Swiss just maybe taking money off the table in equities.
That could be too. You know what? We won't know until they release, because on the last numbers, they did take a little bit off. But they have to be careful here too, because look where that Euro-Swiss cross is, down at 106.82, which I think the lowest we've been in 3 years. Let's see. Click on for my... Oh, yeah. Look at that daily chart. If you can look at it in the cash. Oops.
Yeah,
okay. This is the lowest we've been since April of 2017. Yeah, it's almost 3 years. Now, the key number for that, for me, is going to be 103.80 because after the January 15, 2015 removal of the peg, that 103.80, 2 weeks after it was the weekly close. So I'm talking exactly 5 years ago.
All right,
The
I'm
high
looking
that
at
week.
early number at 103.53. So
Okay, so all right, but you could see where it's at. Are we going to go down there and test that? And when do the Swiss get a little bit nervous, or do they just put their hands in their pocket and sit quietly and wait for some of this to clear? That's going to be the issue. But I just bring this to the point because I want to show you that look at the currencies that are up today, and it's a fairly substantial move, by the way.
and the pounds are still going.
Pounds are still going. Pounds are actually putting in a really nice week. But again, people have been short there because they bought into the narrative of the Davos crowd about the effects. And it's just, actually Boris Johnson handled it pretty well. Now they have to negotiate. But the threats from Europe, you know what? You want to talk about cutting your nose off to spite your face. If they seek retribution, even more than they thought before, it's going to punish themselves as much as the Brits. And the Brits are going to be out there running around the world trying to make all kinds of deals. So, and it's not like they don't have the historical infrastructure to do that. They do. The British, the whole concept of the Commonwealth, the British Empire. There's still remnants of it. It's not an empire, but there were economic ties, that were critical to it. So they exist. They exist. But it's a very interesting board. And what do we see? You know what? Platinum had a miserable week. Copper had a miserable week. Palladium was all over the place, but it kind of actually holds up here well. I'm kind of surprised at how well it holds up. But they did a lot of damage to things that people were trying to get out in front of, thinking, wow, we could really get into an inflationary growth period. But we saw how fast that had the rug pulled out from under them.
Yeah, I really like the platinum chart too that I sent you earlier today.
Yeah, and it's out to these crazy levels. I mean, but that's because they're using platinum as the hedge vehicle on the precious metal plays. So if you want to limit your risk a little bit, you sell some platinum, just like silver. Look at, silver had an interesting week. I think it's going to close higher on the week, but it should be.
It's still 7 cents lower on the week.
Yeah, and what a week it's had. Because you know what? Is it a commodity or is it a precious metal? well, but it's both. It's both. And look at the gold silver cross. It got up over 89. It almost got to 90 at one point this week. So now we're back at basically 80, let's call it 88 even, 88 ounces of silver to an ounce of gold. And that's because it gets punished on its commodity end. These are really good pictures to verify everything that we talk about. These are undeniable pictures. You can't get away from them. If you want to see the impact of what the world is thinking about, that's how they're perceiving this. That's how they're perceiving this. But I don't jest when I say I would cut 50 basis points, but I guarantee you, if Powell were having a discussion with the Fed governors, they'd say, well, what if we do it and the market still falls apart? That's the thing that'll keep them from doing it, because they're afraid that it would have minimus impact.
Well,
but
we've been talking
again,
about that, and I think that's exactly what would happen. Everybody would take the opportunity to sell everything.
Yeah, well, you know what? I go back to what we talked about in December. The perfect year for the markets would be the Fed to do nothing. Because if they raise rates, because inflation was starting to heat up, that would I think the stock market would have a bit of a rally, but wouldn't sustain itself. And and I said back in December, if they were forced to cut rates, the market would do an uh-oh, going, wait a minute, what's going on here? So from an equity perspective, I think, doing nothing, barring this virus, okay? We can't predict viruses. I mean, some people would say that they can, but I can't. I'm not reading Steve Bannon or the book that he loves, The Fourth Turning, when everything is so cyclical. I am not predicting pandemic viruses, not in any way, shape, or form. And I'll leave you with this. I don't know, did we talk about, because my brothers are walking me through some of this stuff, but there's a thing that's in science, medical science, called the Hawthorne Effect, in which once these things start to, like when SARS came, and when the Chinese finally admitted that they had a problem, then they started taking action, and the action minimized the extent. So everybody's predictions based on, just like we're seeing now, how fast it's spreading. But as people start to take precautions, putting on a mask, washing your hands more frequently, maybe taking some, as people start to take some actions, you are going to see a lessening of the impact because people are aware of it. And the term for it, he was walking me through, is called the Hawthorne Effect. I kind of, I said back to him, I said, well, I kind of view it more as a Heisenberg effect, because Heisenberg argued that once you observe something, you're acting on it. That was the whole. I don't proclaim to be a physicist, but the Heisenberg principle was very interesting to me, because I always thought about the Woody Allen movie, which is when he uses that line, but objectivity is subjective, and he goes back and forth. So it's always, being somewhat of an amateur philosophy student, I've read a lot about it, but it's interesting stuff, because you, at some point, and that's what, of course, CDC, WHO, whatever organization you're looking at is hoping, is that people will, by their actions, begin to have some impact. Jet flights being suspended to China. These are all things that will lessen the impact, unless we're into some new virulent strain that is going to explode, and we're going to revisit the influenza of 1918. Nobody's talking about that, and I'm certainly not pretending that. I don't see it, and I don't believe it. So let's just watch it and see. And if they analyze what the death, who's dying, how they're dying, and how it's being spread, those are going to be the important indicators. And I know that if Michael's on, him being in China, again, he's boots on the ground, and he has and he's living it in the center of the storm. So he'll probably disagree with everything. But for those who are scientists and who are analyzing it from afar, you're going to get a whole lot of stuff. And the media loves running with this. They just had a story out. I don't know if you saw that. The New York Daily News reported that they had the first case in New York, and then 20 minutes later was found to be false.
Well,
so
the one thing in the spreads that's interesting is that the Dow bonds are almost back to the 200-day moving average.
Yeah, the Dow bonds. Yeah, I was watching. Yes, the S&P bonds have a long way to go. So, that's I was looking at that for a mean reversion trade. So,
yeah, the Dow bond, the SPU bonds, and we start maintaining under 9,000 in the Nasdaq. You got another almost another full 100 points.
Yeah. And the way the Nasdaq took away yesterday's whole rally, and then, that was again with blowout Amazon numbers, Tesla doing what Tesla's doing, yes, I know Facebook was. I know I'm going to tell you what. I have a pretty good handle. I don't trade Facebook. I haven't. I never traded it. I bought it and made some money with it, but not a lot because it was and I bought it so beautifully. And I'm going back from when it was first launched. But I find, and I don't post things on Facebook, by the way, because I have my reasons, and they can all be found in the book, The Age of Surveillance Capitalism by Shoshana Zuboff, which I can't emphasize enough. If you're really paying attention to the contemporary tech society, it's a must read. She's brilliant. She's just brilliant. And her analysis is great. It's a long book, but she writes beautifully, so it is readable.
Well, we've got an Intel exec in the room, Ira.
Oh, yeah.
He's not in right now, but when he starts talking about Big Brother and tech and what you do and don't want to do, it's frightening.
Well, you know what? One of my favorite people, the only reason to watch certain Roger McNamee is great to listen to, as is Kara Swisher. You know, because they're not just touts. Listen, here's a guy, McNamee has been in it to his eyeballs from day one. He's made a fortune. Good on him, I say, but he warns about it. And you know what? I know when Facebook must be struggling a little bit because my mailbox, right? I must get 10 alerts, 10 to 20 alerts a day, and I never use Facebook about people who posted stuff who I may have friended, years ago, who I never even respond to. Oh, but so-and-so. And it seems when they're struggling, I get more of those. I know. I can't give it to you mathematically. I should, but I see them a lot more. And lately, they've been inundating me. I just delete them. I don't care. I don't even go to look. And I get a little upset with my kids when they post certain things. I go, you don't understand. You don't own that. Once you do that, and I wish the Intel guy was here because I know it's.
Well,
and what
even all your stuff in your house with your phone. I mean, these guys, everybody puts their phones in Faraday bags. They put their computers in a different room. They turn off Siri on their TVs. They turn off the voice recognition stuff on Comcast on all those remotes because they're all listening to you and they're selling it. And I had a conversation with Jason that his kid probably will never get health care because he's got an eating disorder. And they talk about it in the house all day. That's recorded and sold to the healthcare companies now.
Oh, for fuck's sake. Are you serious?
You know what?
Dead serious.
Well, let me tell you what. You post pictures of your kids on Facebook, you don't own that content anymore. Facebook. So if you had a kid who was so, beautiful from modeling, Facebook can use that and garner. And I know people will argue and go, no, it's not true.
Oh,
it's true until other proof. And you know what? They have so much money. Go fight them. You're not going to fight them and win. I mean, somebody will eventually win a case. And it's actually a big part of the election. And it should be a bigger part. But I can't tell people enough, buy the book. Buy your book. And she makes an early comment in the book that if it's free, you're the product.
Huh. And
she has another interesting phrase called data exhaust. So it's not even just what you post, it's everything you're talking about, everything that you leave. Yeah, there's plenty on that shelf in the other room. So it's you leave a trail, and that's what they bank on because that's what they're analyzing.
Well, and they're selling it all of the healthcare companies right now.
In 1997,
I hate that.
When I got elected to the CME board, I think Jimmy Olaf and I went out to see Morgan Stanley we had some issues that we had to discuss, and we didn't, and we had stuff to learn. So they had just bought Dean Witter. And they were showing us what they were doing. And I saw it right up front and close because I said to them, I said, now I know why you bought this piece of garbage. And they said, why? I said, because you're going to mine the data out of all these retail accounts. And they just started laughing. Of course, that's what they were going to do. I said, okay, now, now I'm beginning to understand a little bit because it's all about mining data. It's all about mining data.
What data, at the risk of sounding just, not with it, what data would they have been mining?
That you wanted, that you like to do, where you spend your money, what you take pictures of, what your likes are, what your dislikes are. Then all this voice activated stuff is actually listening to you when you don't think it is. Alexa, all that's going to Google. They're selling all that.
No,
data.
I get that. I get that.
Okay.
We don't have any of that shit in my house.
Oh.
But, the Morgan Stanley stuff, the Dean Witter Morgan Stanley,
Okay.
what data were they looking at?
Well, how you're investing. What are you buying?
Wow.
Where do you are you in, how conservative are you? What is it that you're looking to do? And now they know how to sell you.
Yeah.
So it's, Dean Witter has the account, but Morgan Stanley, 1997, they're doing the underwriting, bond underwriting, stock IPOs. Should we go on and on and on?
Yeah. Okay.
And if you understand what happens in the realm of IPOs or bonds, they go and do an underwriting. Now they have to, when you're underwriting, you're on the hook. So now you have to go sell it. That's the way the investment banks work. You got these big, I know, here. You got these big accounts, and then you were busy dishing off all the crap into everybody's account. And if anybody's from Wall Street and they want to deny it, let's have a go at it. Because of course that's how it works.
Yeah.
I got nothing. Oh. You know what? Here. We're talking Facebook, okay? We're talking Facebook. When Facebook IPO'd, remember that?
Yeah, there was at 44 and it went to 15.
I remember that now.
Well, on the day it IPO'd, and I can verify this. I still do stocks the old-fashioned way because the guy will do a lot of research for me, and I like that. And you know what? I got him down to what I consider a reasonable amount. Could I do it a lot cheaper? Yes, but I trust him, and he used to work for me on the floor, and we have had a long-standing relationship, and he knows not to sell me. He'll never call me to sell me. But we had talked about Facebook, blah, 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 and because CNBC was touting the hell out of it, Kayla Tao, all she did was follow Mark Zuckerberg around for 4 days, as the IPO was unfolding. And then, of course, CNBC said, oh, no, we weren't touting it. We were just, it was a big news story. They were blown up. 10 minutes before the IPO, you know who he is. Marty Block calls me. He says, how much you want? I said, what do you mean? He said, how much you want? I said, what are you talking about? He said, I can get you all you want of Facebook. I said, I want none.
Because of Apex flatly turned those guys down on the roadshow. They said it was the biggest loser they'd ever seen.
But I'm telling you, he said, I can get you all you want. Right now, I'll put it in. They're calling me. I said, I don't want any. And the same thing happened with Blue Apron. I can tell you exactly. I was sitting in Cirrus having breakfast with my daughter, Sophia, who's a chef, and on the day that Blue Apron IPO'd. And I go, I wouldn't touch this dog. And she says, and we were talking about it. She was from her perspective. And of course, we know how bad that was. And again, that was another one. I could get all I wanted. And what I'm saying is documented proof, because all you do is have to look at Henry Blodget and the fact of the trouble he got in for the stuff they did with the IPO market. So, I mean, that's just, so what were they buying it for? It was a conduit to be able it's the same thing the banks do. You know, why do big, you know, quality banks underwrite bonds? They go out and they take on massive risk, but they have the ability to proportion it out. That's what those retail accounts are so great for.
Oh, and Credit Suisse was like the biggest offender of all of them. I mean, Jason and my brother and I put in for 250,000 shares in an IPO on a biotech company, a friends and family deal. And so they didn't give it to us. All right.
Really? Yeah.
2 days later, they call up my brother and they go, well, hey, where's, you know, you owe us $500,000 for this. I go, let me talk to this guy. Boy, after I got done with him, I said, how you know, you're about to lose your license. You know, because after everybody decayed everybody decayed the trades because they weren't winners. So then they went down the list to see who was a dumb enough sucker to take the trades.
Yeah, you know what? And that's so when I saw what they were doing, because Morgan Stanley, you know, that was already, they knew that, first of all, that Glass-Steagall was going to be repealed. They knew that. It was 1997, and it was a giant mistake. So they were all positioning themselves basically to be, and I'm using Sandy Weil's words, who was as much responsible for the repeal of Glass-Steagall, is they were making themselves financial supermarkets. Well, by that definition, you know, we know what a supermarket is. There's ice cream here, there's fresh vegetables here, there's packaged goods here, there's bread here, there's cereal here, there's everything, you know, so you're everything to everybody. And once you have that data from those accounts, because those accounts reveal everything. I'm going to tell you what, you want to show me your IRA, or I can tell you a lot about, you know, if you have a self-managed IRA, I'll tell you a lot about yourself and the patterns that you leave. You know, we all forget that. That's what big data collection. You go on the internet and start buying stuff. Why do they want to know? Because they know the patterns. That's what the algorithms do. They, in a very quick, methodical way, figure out what your patterns are. That if you buy this, you're going to buy that. Just look to see what the ads that pop up. They've done their work, and they get more efficient and proficient at it every day. And they become more invasive. Nothing bothers me more than getting in my car, looking at my phone, no matter where I'm at, and it tells me how many minutes to home.
Yeah, I hate that.
Yeah, well, but that's all part of it. And I know, we signed on to it because, again, if it's free, you're the product.
Uh-huh.
And Zuboff stresses that over and over and over because that's the true model. That's why, let me ask you something. When Schwab and these guys start offering free brokerage.
Yeah. It's not free.
Really? There's nothing that's free. There's nothing. They figured out a way to make more money by enticing you, and you know, oh, it's free. You're going to trade more, they're going to make more money. And the story, because commissions are so low, they figured out, yeah, I don't have to do this. I got better ways. And if interest rates ever go up, they'll go, oh, you know, we got all this money under management. That's when they'll really make money. Now it's very hard in that realm. But if you're getting paid for order flow, you know, there's a lot of ways to skin that cat. And if they get enough big accounts, they'll start underwriting bond issues and unbelievable. And then their big clients, of course, get first shot at it. That's one of the golden things of the way the whole system works. So that's the data mining. Yeah, I'd love to listen to the Intel guy because this is fascinating. This is not new stuff. This has been running around for years. But as people are getting a little tired of how much intrusion into your life this is, that, hey, you know what? It's one thing to have to watch commercials on the network televisions. It's another thing when you're relinquishing so much of yourself, and you can see it. I get ads. If I buy very little on the internet. I just don't. And it's not like I'm a Luddite. I understand that things change. I believe in Globex. I knew that was coming. But it doesn't mean that I have to surrender my entire being and be so invaded between phone. And then they call you. I can't look at something without ads popping up. And you know what? I stopped buying products from companies that inundate me. I used to buy my reading glasses because I really liked them from Four Eyes, which is an online. But every time I'd open up, and I'm on Google all the time because I do so much research. And every time I open something up, and an ad pops up, and I just bought 3. What the hell you want from me? I'm not buying anymore, and I find it so intrusive. I said, that's it. I'm not buying it. And I wrote him a note. I'm not buying anything from you. I'm done. You lost me. Because that's the model. And there's so many people feeding off that model. They just keep pushing. Now I'm getting it from the Democratic Party because maybe I made a donation to somebody, and I'm inundated all day long. It's not promoting. It's irritated me.
Hey, Ira, can I ask you a question to go back
Sure.
a little bit to what it was like? Can you kind of paint the picture of what it was like when you realized that Globex or electronic trading was not only the future of trading, but was
Wait. I have to stop. I just see that the Fed funds Marches went bid. What's wrong? Nobody can buy any Feds? You can't help a guy out? You can't help a brother out? What the hell's going on with you guys?
Sounds like we're in the pit. Come on, help a guy out.
The March Fed funds just traded 44. They're up 2. They're up 2 off the lows of the overnight. Okay, who's the big bopper in there? Who's buying this stuff? Come on, fess up. All right, yeah, go ahead, Matt. I'm sorry.
Actually, Ira and Matt, before you go any further, Ira, try a search engine. Just play with it a little bit called DuckDuckGo.
I use that. Yeah.
Yeah. Well, tell me about it before I go there.
Well, you can control how it tracks you or doesn't track you, as the case may be.
Good. I will try it.
Unlike frickin' Google. I hate that company.
Yeah.
Can't stand them.
I know, but you know what? I'm an old guy, so when and I've been using it for research for so long because really, when everybody else was struggling, they were awfully good. So I know, and I need to get better at it. So thank you. That sounded like it came from Angela.
Yeah.
Yes, it did.
Okay.
Yes, it did. And
thank you,
by the
Ed.
way, what makes everybody think that the sell-off in stocks is due to the coronavirus? Why can't it just be China data that was deteriorating throughout the fourth quarter, U.S. GDP report from the fourth quarter of 19 that looks like shit underneath the hood?
Who cares?
Okay.
Who cares why it's going?
Gold, REITs, bonds, utilities, and the dollar were signaling it for a month and a half. All of those things were front-running the Fed and the data.
You are right, but this is the catalyst.
It's accentuating it for sure.
Because the market had, as we're talking about, in the last week of December and the first week and a half, 2 weeks of January, was placing itself in a position going, okay, the bad stuff out of China has been out. We're looking for commodities were starting to move. I mean, look at the fall in copper.
Look at the fall.
In the last.
Mm-hmm. Oh yeah, absolutely.
Yeah. So it's come with that, I think, more than anything, because these things tried to break certain things, of course, on the geopolitical news that didn't pan out. But there were other things, and your point's well taken. But there are other things that have definitely been in play here, and I think this virus, only because it's rising to the fears of a demand shock. And I think that's what you're seeing in the commodity prices, is a fear of a demand shock, that it's just going to shut down.
Yep. I would agree with that, for sure.
Okay, so that's all. That's the only thing I would say about it.
Yep, no question. You know, but
All right.
the Fed isn't dovish enough, that's for sure.
No, they're not. But that yield curve, that cannot be making them comfortable, because
Nope.
I think, you know, they were reacting to it, as we've talked now for 9 months, 10 months. They were reacting to it, and here we are back again. And this is after 3 cuts and a meeting. I think his press conference was so badly received to people going, okay,
Yeah.
it's like, why even bother? Why even bother?
I mean, what did he say? They want to maintain some firepower? I mean, to be honest, I thought maybe that, you know, he'd get an advanced look at the GDP report.
Right.
You know, since the meeting was Wednesday and the report came out 8:30 on Thursday morning.
Yeah.
You know, so you know, nobody else cut rates, right? I mean, nobody of importance. England, no. Canada, no. Australia, no.
No, but Australia, you can bet on it's coming.
Yeah, they got issues down there.
You know, so if
sure
the
they're
Fed
coming.
cuts rates, but everybody's still growth challenged, you know, is that enough to devalue the dollar? Or does the dollar just stay relatively strong versus everything else?
Well, but the
You know,
strong
X the
dollar
yen and
only
X the Swissy.
well, right. So the strong dollar only becomes an issue for the emerging markets because of the phenomenal debt load, price, you know, that is denominated in dollars. This is where they got a severe problem right now. And if I'm Jerome Powell, I'm nervous going into this weekend. I'm nervous.
Well, look at the SPOOs. They want to come down to 30 and a quarter, where they took off from.
Yeah.
That's where they want to go. They want to go back to the mean, which is back to the September 19 high, 30 and a quarter. And that could be a pretty quick move, especially with what the bonds are.
Ira, I think it was Chris Whalen that said something to the effect of a third of dollar demand is outside the U.S. and they still can't get their arms around it. Is that right or sound right?
Yeah. Yep. I think I remember it in that piece. Yeah.
Yeah. I mean, is that like a big number?
Yeah, it's a gigantic number.
And here, let's look at the emerging markets, you guys. Ira.
But that's what Richard.
Markets. They're done.
But that's what Richard Clarida has been writing about. You know, is that the Fed has, you know, and as I call it, the third mandate that they nod about and wink at, but won't admit to. But because we're on a dollar standard, which is why, by the way, when they talk about Japanization and everybody, the world, the reserve status of the dollar makes it much more a difficult situation than the Japanese. So I'm not buying. Okay, I'm just not buying it. So we shall see the way this situates out. Look at the now the of course the 2 years on its high. Interesting as we come into this. All right, Matt, you were going to ask one more question, and then I'm going.
It was just going to be. I just wanted to. We can talk about it later. I wanted to ask about what the climate was like when you guys were working on pushing Globex through.
Okay.
and how you saw it. We all knew that was going to be, that Globex was going to be the way that futures trading was going to be done in the future in 95, 96. But when did you guys know that it was going to be that quick? 03, 04, volume would be gone.
We just started to see it because that's what the world was, showing us. And we saw what took place in Europe.
Okay.
What happened between the Life and the Deutsche Börse.
Yeah.
When the Deutsche Börse walked away with the Bund contract, I'm going to tell you what, I did phenomenal amounts of research on that. And we had hired McKinsey? Yes, not Boston Group, but McKinsey, and they had acted as a consultant for Deutsche Börse, and I kept hammering on them, tell me about what they did, and they would never answer the question, and I became obnoxious, and that's not the way I do things when I'm researching, but I wanted an answer. I said, we're paying you, but they wouldn't release that, but I had learned enough about how it all went down, and because I was a life seed owner, I had paid attention to it, and I talked to Roger Carlson at the time, who was involved with the CME quite a bit too, and he was a wealth of information about certain aspects of it. So I had already had my answers. I was just kind of like just beating up on the consultants because, what's his name, Don Cheadle, and that what was that show called about the consultants that was on?
The Dirty Lies or whatever it was.
Whatever it was,
that was a very good show. Yeah.
House of Lies.
Yeah, that's a very good show.
Yes, I always enjoyed watching it because it showed the really seamy side of the consulting business. It was
how did you guys get it? How did you get it across? I guess what I'm really interested in is because none of us wanted it. There was not a member around that wanted it then, and it just kept. Side by side trading, and then
well, that was the key to it, and the genius of Globex was Mohammed, who drove it because he saw what was coming. You couldn't deny it. Everybody else was going that way. We had seen, if you're a currency trader, the impact of EBS. That was critical for me, and I was on the original Globex Green Design Committee. There were 5 of us, starting in 1989. Because Leo was smart enough to understand he didn't want tech people. The tech people who were going to be there and being paid, he wanted traders.
Mm-hmm.
So there were 5 of us. And Barry Lynn. Barry Lynn was one of the 5 because he wanted somebody who understood the marketing aspect of it and what his clients would want. And Barry was just exceedingly bright and knew so much about, the customer end. So that was really important, and we worked on it. I got into fights with the Board of Trade over the stupid Aurora system. That was just pathetic. I looked at all kinds of stuff, and so Leo was smart enough to put traders because I wanted it to be as simple as possible. Because I'm technologically illiterate, or as my kids would say, I'm a parasite. I understand technology, but I'm too lazy to read how it all works. So, I jump on and I piggyback. So they call me a parasite, and they're right. But I knew what I wanted, and I knew what I wanted to see. And I will tell you, I made the second trade ever. Leo made the first trade. I made the second trade buying some yen. It was, I think, 1991. It launched, or 92. It was quite a thing. And all it did was get better and better and better and better and better. And there was no, and as long as you protected the exchange franchise, which we did by not making the mistakes that the Life made, we had and the SIBO taught us a lot about handhelds and the importance of them with the side by side, so that again, the important thing was not bifurcating the liquidity pools. New high in the March Fed funds, by the way.
Yeah, the bonds are just ripping with
my gosh,
out of control.
Yeah.
There's no money
so, so that's what, and we saw you weren't going to stop it. I mean, the way they did and Bill Shepard was brilliant in 1997 coming up with when the Merck lost the Dow contract to the Board of Trade because they paid $65 million for it. And I'm telling you, it was one of the great scenes. We were at a Globex meeting that Bill, because we had gotten on the board and he was chairing, and he was like Belushi in Animal House, because everybody was hanging their head. The Board of Trade, the Dow picked the Board of Trade, and he says, "What's everybody so upset about?" Because I already knew what the plan was, because in a very small Globex meeting Bill had laid out, and was creating the mini and putting it on the screen, which was the answer to the Dow. Fact. That's as fact as you're going to get, because I can tell you, I was there.
It lasted a year and a half.
And,
it was over.
Yeah. They blew $65 million. It was a terrible. It really hurt them, because then they had some problems, and when you make a mistake of that gargantuan proportion, it tied their hands for a while. But and the fight was, of course, were the minis going to be in the pit or on the screen? So of course, they just limited the size of the order, and this is all the Merck was not a corporation. We were a
member owned, yeah.
A mutual owned through memberships. So I mean, this stuff is all well known. And Barry was furious because he wanted, his customers were clamoring for it to be on the screen. So they limited it to anything over 30 had to go to the pit. Barry wanted 100. But 30, because anything you did, that type of change, Matt, at the exchange, I learned it, and anybody who kept their eyes open, and you had to give guys like you little bites to find out it wasn't as bad as all the naysayers were saying. So we did little things at a time. And you know what? It taught me a lot about life. That it's just true. It's the way you have to operate. We do little things. Don't go for the whole ball, because you ain't going to get it, because you're scaring people and you're displacing people. And the pain, look at the displacement of people is the pushback against globalization. And it's why Donald Trump is in the White House.
That's right. That's a great point.
Everybody knows.
Ira, you're fading.
I'm sorry. Well, I'm probably at the end. But that's, I gave it the full story. It's always interesting. It doesn't do anything for anybody's trading, but you asked the question, so I gave it to you.
Thank you. No, it's
with
interesting.
No holds barred.
It's interesting, and I think it does. Ultimately, it does have something to do with people's trading. When traders understand the history of why we do what we do, or how we do what we do, and how it changed, and they find out who the people were that were instrumental in creating that change, and the fact that they are actually talking to them right now is I think very important. And then that goes a long way in just setting the entire setting the stage for people to say, holy cow, I'm talking to one of the people that actually created this the way that it is, or participated in it. I certainly better listen, take notes, and go ahead and research everything that they say and everything that he's doing and saying, so that I am more prepared. This room wouldn't have existed if guys like Jimmy Olaf, and I'm not taking any credit because it had nothing to do with me, but I understood why it had to be done, but to open up the architecture so that all these other platforms could write to it so they could trade with it, because that was the problem with the Board of Trade and others. They didn't want any open architecture. They were trying to protect it, but we said, hey, you got to keep breaking down these barriers. Otherwise, we wouldn't be having this conversation right now. Yeah, no, we wouldn't.
Well, we were talking here, Shopify was the last of the big tech names that have totally blown off with an ORL day. So the only thing that hasn't is Amazon, and you know, I wouldn't be long that either.
Okay, gents, have a good weekend. I hope it's a calm weekend. I hope that there's a massive slowdown in the spread of this and that they begin to understand a little bit more. And then we'll see. So, because we'd like to remove this. The point that Angelo brought up is dead right on target. I'd like to remove this because then we'll find out if the markets are just ran way too far ahead of themselves and needed to correct besides the virus. And I think you saw that kind of yesterday afternoon. I think that's why Angelo's point was really good, because you saw that massive rally. And it even opened, you know, we got higher last night, you know, of course, following on Amazon and some other things. And then it just collapsed. Now, is it the virus, or are we just so far ahead of ourselves, which I think and have thought, which is what I thought that, you know, why I raised that issue about the SPU bonds, you know, over the last 30 days, that it was worth looking at, because it just, not the bonds. Look, I'm getting beat up every day, not financially, but I'm locking up with some people, some very smart people, and because I just cannot extend my duration. I just cannot extend it. I will not extend it. And I don't care, you know, the bonds can rally, and you'll have some capital appreciation. But if the Fed does what I think the Fed is going to do, I don't want extended duration. I don't. I'm nervous about it. But we'll see. But I think that the greatest fear for them, and you know, Judd, you know, and Matt, as we talked about it, if they blow their wad here and it doesn't work, you know, they're in trouble. But they have an issue with the emerging market debt load and the price of the dollar in emerging markets. That is a major problem. And I'll tell you who understands it very well is Richard Clarida, the vice chair. This is a problem right now.
But where do they get these guys at the end of every year, Ira? They come out and say, hey, diversifying emerging markets. And every year they say that for the last 3 years. It's been the absolute wrong thing to do. And we have discussed that you have to be out of your mind to put your money there.
Well, Judd, let's look at it this way. You're a sales guy. And you want to differentiate yourself from the herd. And you look and you go, well, everybody's in this, everybody's in the fangs, everybody. You know what? If I catch this one right, they'll roll me out on CNBC, and I'll be looking like hey, this guy called the turn. Hey, this guy. They won't remember the 3, 4, or 5 previous years. You know, it's like with Kramer and the European financials, when he was so bullish of, oh, you got to buy Santander, disaster. And when they eventually turn around and start rallying, they'll show you those clips.
When you get bullish, the beans at $16.50.
Yeah.
When we got out, he got bullish.
Yeah. Listen, Jim Cramer is a very good stock analyst. I'll give him that. And he was very helpful to people in explaining to them bulls, bears, and pigs. But when he talks global macro, anybody just turn around and turn the TV off, because you ain't going to hear anything that's going to help you. It's just not his strength. But he's got to say something. You know, he's television, and television cannot stand going black. So you got to have something to say.
All right, guys.
Somebody slapped me because the March Fed funds just keep rallying.
Oh,
just slap me hard, will you please? Just slap me hard.
It's I can't even pull the things up. That whole screen of mine is all grayed out.
Yeah, that's right. I'm giving you just and you know, to me, somebody. But the numbers are so. You go on this Globex, and it's, you know, it's 150,000 up. I haven't ticked wide.
Jesus.
Yeah, look at these 21s. I mean, they're just the Fed funds. The 21s are just out of
Yeah. Let's see those. Wait, hold on 1 second. I'm going to put up the March 21. Let's see.
I mean, that's where the
Wow.
rolling.
Wow. Yeah, but they're already priced for a 50 basis points cut in the next 12 months. Very interesting. The only one who could handle that is Pax steps up and goes, buy them.
Fucking buy them all.
And see what happens.
Well, yeah, and look at this. Even the March 20s. I mean, this is a beautiful breakout.
I am telling you, that's what I'm looking at. I have orders in both. I never got filled. I had an order in at 41.5 because I didn't want to pay up. And the Fed now becomes the line. You know, January expires today. Let's see where the Fed January is going to expire. Let's see.
Judd, how many weeks ago did you and I start talking about the breakout in the 20s and 21s?
Oh yeah.
Yeah. So, and look if the pit was open and there was 150,000 offered, Matt, and you walked in and said buy them all, you'd probably get 100.
Yeah. Then everybody else and all the other guys would just be sitting there chewing on their cheese, writing.
Yeah.
Ira, if that was you and me, that we had that in the Canada. We didn't get one freaking contract.
No.
Oh yeah, it's
Remember that?
So you know what?
We didn't get one contract.
So now you know why Globex had to come into being.
Yeah, we lost $10,000 on something that we should. Those guys wouldn't even let us out.
Yeah, they couldn't even look at you. Yeah.
Yeah.
They would turn their back, start writing like cattle in the pastures in the winter. They just turn their asses to the wind.
Yeah. You sit there and you count. You got all the offers counted, 250. I see them all. Buy them all.
Yeah.
I sold you 20. I sold you get 100. You get 150, and everybody else knows. All right, if Pax is going to buy them at 50, he's sure as shit going to buy them at 60. So they hurry up and write them.
Yeah.
I'll say you 20 at 60. Yeah, okay.
Yeah, 20. Yeah, I know. But I still love my time on the floor. You know, that was just part of it. What can you say?
It was.
Yeah. The energy level, I learned a lot, so I'm making light of it, but, you know, and guys, okay, whatever. Okay, that's it. I hope it's a quiet weekend. I hope they get a lot of this stuff resolved, but we'll see, because there's definitely, and one of the biggest fears has to be, and we go back to Mnuchin of 2018, when he was calling the banks over the weekend. There's so many short vol positions out there right now that this gets very dangerous because, again, nobody knows. Nobody knows.
Well, VIX is over its 200-month moving average right now.
There you go. And how are people protecting themselves? Because, you know, if you're not lifting that, you're not paying up, you're putting something else on. And that's how these markets, you know, react, because it's all based on that.
Yeah. Ira, nobody knows where their thresholds are, where they're set.
None. Right. And now they want to roll back some of the regs, which I'm going to tell you what. I'm a guy who believes if you have regulation, have good regulation. Because regulation is a necessity. It just is. And I'm as much a free market guy as anyone, but I've learned that if you're going to have regulation, only a fool wants ineffective regulation. Only a fool. If you're going to have good regulation, have good regulators, you need it. We'll get into that discussion another time. But then do it right, because then it benefits everybody. Bad regulation benefits a few, because they're the ones who write the rules anyway. So that's my moral for the weekend. Have good regulation, and it's not a bad thing in that regard. It's not whatsoever. But they want to roll back some of these regs, and I think that they're wrong. That's my opinion. As a trader, I think they're wrong because I like some of the things. It's finally something that was benefiting me. And there's not a whole lot because a lot of it is weighed against you. So, that's the end of that story. All right. Have a great weekend. Thanks, guys.
Thank you, Ira.
Okay.